The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now. What's up, traders? This is Vee Trades, and today I'll be doing a technical analysis breakdown for ProShares Ultra Bloomberg Natural Gas ETF with the ticker symbol BOIL. This was a viewer's request, and thank you for your donation. If you want a chart analysis guaranteed to be done, please read the description below. Also, take a second to give the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only, does not constitute any financial advice. I will first go over what I see in the daily chart and finish the video off with the weekly chart. So here we have a natural gas ETF, something I'm definitely interested in. But let's take a look at the chart to see if we can get a better deal on it. Well, it looks like there was a nice high of the year back here at the 135 level, which we have not reached since it made that peak. A mark with a horizontal line. There was a little double top at that level. We crashed down quite a bit, and then we had a couple legs up but failed to continue higher. So that's not a good sign, because we should have continued higher. You see, this was the first impulse up. We had a move down, the correction. We started the formation of the second impulse, and it abruptly stopped at the 122 level. It was supposed to reach the 138 level. It didn't, so you can see that prices sold off. This tells me that the aggressive buyers are weak, and there's a bearish imbalance on this chart. So that tells me you can get lower prices. We did have already two legs down, so this is the first leg, second leg. See how this measured move was met. You can see this was the impulse right here. We had a correction up, and then we had the second impulse, and this measured move was met. So that's a good sign. That tells me that the bears are doing their job. And right now we're in a formation of a small little range. So that's why we're going sideways at the end of the measured move, because now sellers are getting out of their positions. Buyers are not sure if they should buy, or sellers are not sure if they should continue selling. So we kind of getting this indecision, a little bit of choppiness right here. So I can also draw a little channel working lower. So if I connect the swings that we currently have, drag it down, you can see we're bouncing right off the support side of this channel. So that tells me we could see a little pullback, and I'm expecting a little pullback in the short term, probably back up to the 72.88 level. That's where the previous breakout point is, and we are a little distance away from the EMA. So we could see a breakout of this little range, make a little two legs up, probably come back to that level, meet the EMA, and then continue lower. And I'm thinking we're going to continue lower just because we cannot get up to this high point at the 135 level. And right now we're below the EMA, but it doesn't really matter if we're going back and forth through the EMA, because this is a range. It's not really a trend, so we got to just focus on the market structure. Market structure looks like a range, so we should go back down to the lower side of the range. And I would say the support for that range is right around that $25 level. And if we do a measured move, meaning I measure this impulse, and you can see this is all just a correction up. And if I move the impulse, if I measure the second impulse, you can see that it's headed right at the bottom side of the range at the $22 level. So there's some confluence there. So I'm expecting lower prices. This chart doesn't really look bullish. It looks kind of like just a range pattern. We've been going just up and down since the beginning of this year. You can see that if you held your position since March of this year, or even if you held your position since September of last year, you're at break even. This is not a trend up or down, which is going up and down inside of a range, a high and low point. So right now, since we cannot go up to the high point, I'm expecting prices to exceed or at the very least meet that low point. So that's my target for right now. In the short term, maybe the next couple of weeks to a month, we're going to probably see a pullback. That's what I'm expecting. And then continuation to the downside. Now, we don't have to get the pullback. It's just a higher likelihood. We could just continue lower, break this $38 level, and then maybe even reach the low 20s. So that's everything I have on the daily chart. I'll switch it over to the weekly chart before we wrap it all up. And here we have the weekly chart for BOIL. If I zoom out, I can see the price action since 2011. It's kind of weird how this chart was trading at the $37,000 level or point level, and we crashed down to the $55 level. I don't know what's wrong with this chart or whatever, but natural gas does have a lot of charts that look like this, so I'm not sure what happened to have this large crash. Even uranium ETFs have this type of chart, but it doesn't really matter. Let's just focus on, you know, the past couple of years. Again, kind of going sideways, having these large moves up, large moves down. Basically it looks like a range pattern to me, and that range pattern is being supported at that $20 level, and we're finding resistance right around the again, the 125 level. So maybe even a little bit lower, maybe the 120 level. So this is like the range pattern. Since we just came off the high side, I'm expecting price to go to the lower side. So that's my target, probably towards the end of this year, beginning of next year. I would be expecting that target to be met. Could we just go up from where we are, meaning we get a somehow it just turns into a bullish imbalance, meaning we cannot even reach the lower side of the range? Yeah, we could. It's just not really likely, since we just came up short here. It tells me sellers are stronger and aggressive sellers are stronger, so we're going to be seeing lower prices. I mean, things can change on the chart, but then I'll have to give an update. But as right now, in the price action I'm seeing, which I have to go by, it does not look good. It looks like we're going to be seeing lower prices. Now I can find a similar chart. Let's go look at SPCE. Again, don't even worry about the stock itself, just worry about the chart. You can see that was kind of flatlined for a long time. Then we started seeing these large moves up, large moves down, and look what happened here. We made a high point, and then we had a large crash down, and then we had another try attempt to make a new high point, but it failed. So this high point is lower than the previous one, so it kind of looks like an M formation, meaning we had like a large move up, a crash, another move up, but this move was shorter than the last move, and then we had the final crash down. So remember how this looked. Also looks like a range pattern right over here. And let's go back to Boyle, and again, very similar. You can see how we had a large move up, a crash, another large move up, made the high point, crash, another move up, but this time that high point was lower than this one, and now we're seeing the crash. So basically it looks like another M formation if I draw it out. Let's go and clear all the drawings. You can see how we had a move up, crash, move up. This time is shorter than the other time, and now we're expecting that crash back down. So that's what I see, expecting lower prices, and that's all I have for Boyle. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel, since you might be surprised what you can learn. Leave a comment down below on where you think prices are headed. Also share the video if you want your friends who learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time, and bye.